Hi, welcome back to another edition of Lippers Fund Flows Inside. My name is Tom Rosie, and I'll be reporting the flows for the week ended Wednesday, May 13th, 2015. We actually had another set of outflows, about $1.5 billion that exited the conventional fund business. This is really kind of a head scratcher after we learned that we had a better than expected non-farm payrolls. In fact, beat the crud out of the March non-farm payroll numbers and came in line, a little bit lower than expected. People, market actually was very exuberant. It took the market to a huge climb on Thursday and Friday. But by Monday, the hangover kind of set in, and people started getting worried about, first of all, the Greek bailout. Another 2 weeks left. Final say is going to be around here in the next week or two, and they literally could be out of money within a 2-week period of time. In addition, we also saw that the San Francisco Fed chairman, actually he's the president of the San Francisco branch, came out and said, hey, listen, we think that interest rate hikes should come earlier, a bit earlier than people are anticipating, and kind of put a pall over the market for the rest of the week. But we had a tale of two cities as far as ETF and open-end funds go, so we'll talk about that a little bit later as well. Let's jump into our macro group to see what happened to the groups as a whole. Equity funds saw about $1.5 billion in outflows. Taxable bond funds gained about $1.8 billion. Muni bond funds lost just a little bit under $100 million. Not a big deal. Money market funds really not a big deal either. Saw about $5 billion in outflows overall. So really it was kind of a ho-hum week overall, but again, kind of a head scratcher considering we saw some good economic news. Let's see how that panned out to the equity universe as a whole, and we'll get into kind of the details there. Equity funds had a 1.26% return for the week. This is the first week in 4. They've actually had positive returns, but still saw an outflow about $1.5 billion. This is the third consecutive week they've seen outflows. When we take a micro view of it, we take a look at the domestic equity funds. We saw that they lost about $1.2 billion, and it's the 15th consecutive week that we've seen outflows. On the flip side, non-domestic equity funds, even though, again, we had Greek concerns and the like, non-domestic equity funds actually saw inflows of about $7 billion. This is the sixth consecutive week that we actually seen inflows into this group. And how it broke out, we took a look at the large cap funds. Large cap funds handed back the largest sum, losing about $1.3 billion in equity. Income funds actually lost some money as well, losing about $400 million. If we look on the ETF or the international side, international equity funds actually took in 1.1. And if we took a look at the bigger groups, the subgroups of that group, emerging market funds took in $198 million. Pacific ex-Japan, Pacific region funds, and Japanese funds all were on the plus side. So kind of amazing considering we had some of those concerns out there as well. And some funk actually in the markets after the Chinese government, actually the Central Bank of China, People's Bank of China, sorry, basically it had the third interest rate cuts in 6 months, maybe showing a little sign of despotism coming around to try to prop up their economy. And obviously we've always depended on the Chinese economy over the last 4 or 5 years, but it looked a little bit desperate. But nonetheless, let's take a look at equity fund on the ETF side to see what happened there. There's a little bit of a tale of two cities here. For the second week in 3, we saw $5.2 billion of net inflows. As we, if we start thinking that there are some problems overseas, institutional investors, the APs were actually probably pretty wise in focusing on the domestic equity funds in contrast to what they did on the retail side. But anyways, the S&P 500, Spider S&P 500 saw about $3.7 billion net new money coming to their coffers. And the iShares Russell 2000 ETF took in about $600 million. On the bottom of the barrel, we saw some plays against gold, and we saw some plays against international. So Spider Gold saw about $522 million in outflows, and the iShares MSCI or emerging market European Monetary Union actually saw some outflows too. About $466 million exited their coffers. And if I take a look at the non-domestic side as far as flows go, we saw about $0.6 billion of inflows. It's the smallest inflows that we've seen out of this group, so from the ETF group, in 14 weeks. So we're seeing a declining interest in the international market on the ETF side, even though we've seen, again, the 14th consecutive week of inflows. Let's go ahead and take a look at our fixed income universe. There we saw a little bit of dichotomy as well. For the 18th week in 19, we saw inflows about $1.8 billion, as I said before. First week in 4 that we've seen positive returns. It was only 0.18%. But if we took a look and kind of went to the micro groups, flexible income funds actually saw about $600 million of inflows. It's the 16th consecutive week they've seen inflows. And corporate investment grade debt funds actually saw some inflows as well. About $300 million in their group, but it was only the first week in 4 that they've actually seen inflows. If we take a look at high yield funds, though, we actually saw some outflows in this 4th consecutive week, $115 million in outflows. In fact, that was the only group that experienced large outflows on the open-end side of the business. If we take a look, though, at ETF side of the business, we see about $936 million in net inflows. First week in 3 that we've actually seen inflows. And at the top of the group, here's where kind of a dichotomy happens. At the top of the group, we see the iShares iBox investment-grade corporate debt funds ETF actually taking in about $469 million. That'd be expected, but the next one down was Spider Barclays High Yield Fund. Actually took in $314 million. And if we jump to the very bottom of this slide, we see that the iShares iBox High Yield ETF lost about 352. So people will obviously on the ETF side were a little bit confused, or you had major players either shorting something or going against each other, or whatever the case may be. Certainly not unusual to see it in the institutional space, though, conflicting ideas. Let's go ahead and take a look at our muni bond fund category and kind of make this come to somewhat of a conclusion on that on the longer end of the portion. We saw about $86 million in outflows. That was about it. It was almost nothing to speak about. Second consecutive week that we've seen outflows. And for the 6th consecutive week, we've actually seen negative performance, about a 0.13% return on the minus side. And how this played out, if we took a look at like national munis, we saw the lion's share come out of that group, about $65 million. Second consecutive week, they've lost money. And of course, the rest would go to single states. Why don't we go ahead now and turn our attention to money market funds. Money market funds for second week in 3 actually saw outflows, about $5 billion. That's it. We've been seeing some huge numbers, $30 billion at a whack. This week, not a lot to talk about. $5 billion, though, on outflows. How it broke out, taxable money market funds saw about $3 million in outflows. And if we break that down even further, institutional funds saw about $2.5 billion in outflows, while retail shares only saw about $500 million in outflows. And at the bottom of this group, tax-exempt money market funds actually saw outflows about $2.1 billion this week. So certainly that was the story, and again, really a non-event as far as the recent money market funds have gone. Other than that, again, it was the second week in 3 that we've seen outflows. Well, that brings us to our end of our conversation, and we heard today that we saw production numbers come in. So industrial productions came in for April, and they were lower than expected. Now, if we take the readjustments though to last month and see some of the revisions, it really was flat and was zero. Our expectations was it was going to be zero before revisions. We'll have to check back next week to see how that might have played into flows for this week on Thursday, Friday, and of course Monday, Tuesday, and Wednesday of next week. Well, if you have a need to do a further dive into the fund flows business, you can certainly go to our site at www.lipperusfundflows.com, do a deeper dive in the sections that you want to take a look at. If not, meet us next week, where one of our analysts will talk about the flows for the week. Until next time, my name is Tom Rosine, wishing you the best in your wealth planning and creation.